So we were just talking about seasonality, right? So when I say seasonality, as I had mentioned, it is actually the different phase or the different time or of the year where we actually expect the price to move up or we actually expect the price to fall down. And we had also told that seasonality is just one factor that comes into play in determining the price of crude. Now, we realize that usually from February to April, okay, February to April, the price would be kind of at a fair value. Sorry, in the sense like the crude price would be kind of at a lower price. Now, from there to September to October period is where the crude usually witnesses a bullish run. Then post September to October to November to December, you usually see a dip in price and the cycle kind of keeps on repeating. Now, there is no necessity that each and every day, each and every year, the seasonality should occur in the same manner. But mostly, we see that seasonality repeats in a similar kind of manner when it kind of comes to crude. Now, we have actually gone through some of the major things that you need to know in the fundamental side. So, let's quickly have a recap on whatever we had discussed. Suppose that we'll actually look at some setup that you could basically monitor based out of fundamentals, and you can actually accompany your technicals or you could accompany along with your price action setups to implement better trades in crude oil. So to summarize, we realize that CL WTI is what we consider as a benchmark of crude in India, even though when we import Brent oil. Now, we also understand that crude oil is the largest traded commodity, which means a lot of opportunities. Almost, I suppose, like 110 billion dollars worth crude is traded every year. Now, because of this lockdown, corona, and all, it definitely must have come down. So, as of the updates that I have got before that, it was 110 billion dollars. Now, we realize that the major benchmarks are WTI, Brent oil, and Dubai crude. And all these you can track on investing.com or even on TradingView. If you're looking at TradingView, WTI is US oil. When it comes to uh, investing.com, it's this CL. Okay. We also talk that since India is majorly dependent on importing crude oil, the exchange rates is also a very big factor. And the price that we see in the Indian markets is actually nothing else but the price of WTA converted into Indian rupee based on the exchange rates. So, two factors are negative for our country. One is the price of crude oil going up, and the other one is the exchange rate, that is Indian rupee depreciating. Now, in simple words, I can tell you, crude oil is actually considered as a angel commodity, while gold is considered as a devil commodity. I'll tell you why. So the price of crude oil actually moves up, or price of crude oil actually picks up whenever there is prosperity around the world, economic development happening, etc. While the price of gold shoots up when there is uncertainty. For example, you must have witnessed that gold had a really good run this corona period. Why? Because there's a lot of uncertainties, chances of recession, etc. And people were looking out for safer forms of investment. Don't think that people are buying jewelry. No, it is not jewelry that people are buying. US dollar and gold are considered as the two biggest investment assets around the world. Now, when people feel that there is some sort of uncertainty that is existing, people look out for safer havens, right? Safe investment havens. That is what we refer to as like that is why we refer gold to as a safe investment asset, because since this is physical and you are actually storing it as physical gold or in terms of coins or sovereign gold bonds, people feel it to be much more safer than investing in US dollar. Why? Because if US dollar depreciates, they are going to lose money. So gold is a devil commodity due to the very same reason, because it shoots up when there is uncertainties and bad things happening around the world. Trade war, war between countries. Okay, now all these things will shoot up the price of gold. While crude oil, if there is development and prosperity, that is when crude oil is going to pick up. That is like lot of development happening, energy consumption is going up. So since the exchange rates are also involved, understand that USD INR rates that also play a role in the movement of charts. Now, one more thing I just wanted to mention to you, like take this of utmost importance. Crude oil in India is traded at MCX, Multi Commodity Exchange, from 9 a.m. to 11:30 p.m. So morning 9 a.m. to 11:30 p.m. So this is why this is pretty much attractive for working employees. Why? Because even after your office you can trade. However, in the international markets, okay, in the international markets, crude oil is traded from early morning 4 a.m. to midnight 2 a.m. From morning 4 a.m. to midnight 2 a.m. it is traded. That is like 22 hours, right? So 22 hours the market is open, and it's just like 2 hours the market is kind of closed. So we can say, okay, the market doesn't close at all. Now, due to the very same reason, whenever you are trading on crude oil, let's say that we are trading in MCX. Because we are trading on crude oil in MCX, due to the very same reason, we track the charts of the international markets. Why? Because international markets doesn't sleep and the charts are continuous. Okay. However, when we look at Indian markets, for example, our market closes at 11:30 p.m. Right now, the next day, when it opens at 9 a.m., a lot of things would have happened in the price of crude, and it would have moved a lot. So when we look at the charts of crude, in MCX, you will be having a lot of discontinuous data. Meaning, what has happened when the Indian markets were closed, those things are not reflected on the Indian market charts. So, I highly advise you, please look at the chart of the international markets, because that has continuous data. Now, marking levels, marking technicals, everything is going to make sense when you're tracking the international markets chart. Now, we also realize that the most favorite part of crude traders is that once crude usually takes up a trend, it tends to stay in the same trend for some good period of time, and that is actually a good cash making opportunity if the crude trend is continuing. Now, one more thing is we realize like we import almost 80-85 percentage of crude, and storage costs are also very high, and that was the reason we discussed like when there was like corona outbreak, when companies were not able to dispose crude oil, there was a time when some of the benchmarks had a negative side value. Then we also discussed almost 90 percentage of the crude is used as fuel. We realize that Middle East, these countries are the ones that play a major role in the production alongside Russia, US, Venezuela, all these countries. Now, when it comes to consumption, we realize USA, India, China, Japan, especially the emerging economies have a good role to play. We also talked about OPEC, which is the Organization of Petroleum Exporting Countries, which has a huge say in determining the balance and maintaining the price of the crude in the international markets by regulating the supply and demand. Obviously, demand they can't regulate, sorry, supply, meaning like they can decide how much production to do, etc. etc. Then now next we are basically moving forward to see what all you should actually be looking into while in order to track the fundamentals of crude. So obviously when we are tracking news related to Indian markets, all of us know we are looking at money control. Now I'm just going to introduce you some particular sites that you should be watching out. Okay, when you are going to be a crude trader, or when you are somebody who's going to track crude oil, because these things are very much important. So how you could track the news, how you could make use of the economic calendars, Twitter, Google alerts, etc. And one really good site I'm going to share with you that you could make use of.